a minute. This receivable in the question referred to debtors, okay,
Yeah,
and not a sum of every receivable.
yeah, sure.
It's referring to debtors. So if there is any amount yet to be received from an income, it needs to find its own account head, which is called rent receivable. Rent receivable, the word receivable means it is an asset. Okay. So the rent income yet to be received must fall under a rent receivable and rent received account. Whereas the receivable here in our balance sheet is meant for only debtors that we are yet to receive money from them. Are you okay? The one who was asking the question. Network.
Yes, I'm not okay, please. I wanted to know the difference between the rent receivables and rent receipt.
Please, were you in class when I began? I said rent receive
Um,
means that you have received money for it. And it is not a balance sheet item. A receivable is an asset yet to be received. You've not actually received value for it. Okay? You've not actually received value for it. Anything receivable means that you have not actually had the thing in your hand. Are you with me? So I'll give you a phone. You are yet to receive the phone. It is an asset and not a revenue item. You've not received it. Okay. Is she here?
okay,
Or my network is
I'm
still
here.
messing up?
No, I'm here. Sorry, I have a baby and she's disturbing. That's why
Oh,
I'm not
let
listening.
the baby disturb me small. At least I'll be happy.
Please, I'm listening.
So just like I'm saying, rent received, anything receivable means that the item will be paid by the debtor, the one who is
Okay,
owing you. He's yet to make payment. He has not made payment yet.
okay,
But then received means that the money has actually been given to you. So this accrued income on rent is yet to be received. And then we need to have its own account heading for receiving. Because the
okay,
receivable here would have been for debtors. We don't know the type of receivable. So we are treating that receivable as debtors figure only. Because debtors are those who are bought on credit basis from you and are yet to make payments in tune of that.
okay, please. Thank you.
In a footnote 6 be penal because say no. Okay. When they'll be doing please, this is the least you can ever afford to do. Just get the understanding. Okay. So let's prepare the receivable account again. Let's find a difference. Let me see. Find a difference. Find a difference. Find a difference.
Three six eight zero.
It's 3660. That's the
Three
difference.
six eight zero zero. Yeah.
The
800.
difference will be 36,800.
Yes, so this is the exact difference. So the bad debt, just like I said, it is just going to be an expense item. It's not going to come in um your balance sheet. Okay. If there was an information about bad debt in additional information, that is when it would have been sent to the um balance sheet. I'm still using the word balance sheet because I know some of you are still not conversant with the word balance sheet. Statement of financial position, sorry. Okay, so what I'm basically saying is that
Now,
this
the thing, where is it coming from?
the 10. Oh, the 10 is the bad debt. The 10 is the discount allowed. Here, the note above. You received the check you received from the people was exactly 440. Okay, but the person was owing you 450. What does it mean? You have given 10 as a discount to the person, right?
Okay.
Right?
Thanks. Yes, please.
I think the one who asked the question, Kawahira.
Thank you. I've seen it.
Okay. So this 10 is basically as a result of Matowade and the this kind of bed. But bro, no, you said you have dashed me some, and it is an allowed discount, which is an expenditure item. Okay. Now, so it is on this 36800. That is what we charge. What is the percentage? I think I need to get my calculator because
Percentage
36.
of value.
You said?
Percentage of value.
Hey, did I say the value?
736.
736.
Where is Joshua? Now, this is the new provisions that you are making. And this is the provision that you exactly made. Joshua, the difference between them, Ebekwa Himfa.
Your liability.
Yes, you made an exact provision for 700, but then your provision had changed to 736. What do you think the difference will be called? And where would the difference go? Yes.
It will go to the expenses
Why?
as a provision on doubtful bad debt.
Why?
An increase in provision.
Is it an increase or a decrease in provision?
An increase.
So an increase will
Per
go
the
to.
answer we've gotten is an increase in provision.
So
And
an
it's an
increase in
expense.
provision means that it's an expense, right?
Yes.
No. Liability.
Oh, it's an expense.
It is an expense.
Yes, sir. A
Oh,
decrease
okay.
one is a revenue or an income.
Thank you. Do you understand? See, you said that you wanted to collect 700. Now you are making an extra 36 provision for it. So it becomes an excess that you are going to spend. Okay. So it is not the whole 736 that you are going to incur. See, you said 700 people. You are assuming 700 CDs will not be received. At the end of the day, you are revaluing your provision again to 736, meaning that you are doing an excess of 36 in what you have already made provisions for. Okay. So your expenditure item for these provisions or the allowance for the doubtful debt, you are not going to record the 700, but you are going to record what? The difference, which is what?
36.
Okay. Can we box on? Yes, we can. Now, the last item, which I just
Sir, please, one thing. So what are we adding? What are we adding, less and less? Which one? Or
at
it just affect one
the
thing?
VNI,
Yeah,
what is it affecting?
expenses. So maybe the corresponding entry.
Oh no, the expenses,
Or just one.
and then you go and less
Okay.
it from the when you get to the current asset, you go and treat it there too as well.
Okay.
You treat it under the current asset too as well. So when we get to the current asset, we shall cross. Okay, so let's go on. We less the whole figure from the current the receivables. So
Okay.
yeah. So you write receivable less allowance for receivables, then you write it there. Just like the way if you had bad debt, you'd have written allowance bad debt, you take it from it. Yeah, but with them okay. Let's go and do for this one. I want us to solve it together. And that one will not do it by mentioning it. We are going to solve it together on the PPE schedule that I was writing to you. Okay. So let's go. What are the forms of assets that we have in the question? So I'm using this to kill the bird called PPE schedule. I'll use the same question to kill the PPE schedule. Okay. Okay. So the PPE schedule, let me write it on, let me bring it to a new page so that you understand what I'm trying to do. If you can't see, let me know too as well. Okay. So what are the assets, the forms of assets that we have in the question? We have equipment, right? You have equipment. What else do you have again?
Yes.
Motor vehicle.
Puerto Rico.
Motor vehicle.
What else again do we have? They are just two. Are they just
Asset.
two?
Yeah.
That's it. Yes.
Okay, they are just two. All right. Thank you. So, since there are two, we put total here. Let's put total closer to motor vehicle. Okay. So what was the cost according to the balance, the trial balance? The cost of the equipment was 2024050. How about the motor vehicle?
38,000.
30,000.
Okay, 38,000. The total will be the addition of the two, 62,052. Now, during the period, were there any acquisition of an asset? You see the footnotes that you are writing here. Go and check if there was any acquisition. We said we need to add something to the equipment. 2650. Did you see it? Ivan,
Yeah.
I seen it.
Yeah.
265 what?
0.
0. So the total for it would also be 26, because they didn't buy any motor vehicle or they purchased some motor vehicle along the line. Okay. Now they didn't purchase any motor vehicle along the line. Was there any other purchases again? No. Did we have any donations? No. Were there any prior year adjustments? No. So what will be the total? The total for the equipment is this, and the total for the motor vehicle is also this, and the total for the total is also the addition of these two total. So what I'm just trying to say is that it is not every question that you see some donation and prior adjustment. So in this type of question, we didn't have donation, we didn't have prior adjustment. So the total is the addition of the asset plus the cost of the asset. Okay. Now, since we don't have prior adjustment, there is not going to be any prior depreciation. But then there is an accumulated depreciation in the question. Look at it. What can you say about accumulated depreciation? What was the accumulated depreciation for equipment? 9,100.
9,100.
What was the depreciation for motor vehicle?
24,000.
24020. Okay. What is the total for these two? 33,120. Now, this 33,120, there is a statement that is being made before we can charge the depreciation for the year. Now, what was the depreciation? How do we charge depreciation for equipment? Equipment is how many percent? 20%. And then motor vehicle was how many percent? 40%. But then we've been told that Equipment was on a straight line method, and the straight line method basically means that your percentage on the total. So what was the percentage? The percentage was 20%. And what was the total of the assets? 26700. That is the depreciation for the year for equipment. How about depreciation for motor vehicle? It says on a reducing balance method, 40% per annum using the reducing balance method. What is reducing balance method? It basically means that the total cost that you have minus the accumulated depreciation times the percentage. So we are going to have the 40% multiplied by the cost of 38,000 minus the accumulated depreciation of 24,020. Because it says reducing balance method. So what do you have?
5592.
5592. Are we all together?
Mm.
Why
Yeah.
not you? Who is lost? Let me find you. Obi anyo ye. Okay, so if we are not lost and then we are all together, then what is the total for the depreciation? Yes, can you tell me the total for the depreciation for the year? It's 10,9320. Now, how do we find the total depreciation for equipment? It is the accumulated depreciation plus the charge of the year. How about motor vehicle? The accumulated depreciation plus the charge for the year, and that is going to give us total depreciation. Now, when I add this to this, that gives me my depreciation entirely. So, how do we find the written down value? I said it is A minus what? B. So A, which is the total cost, minus the B, which is the total depreciation, will give you the new cost of the motor vehicle. The A of the motor vehicle minus this as well. Okay.
Please, I have
So
a question.
please ask your question. Please, a question.
Please, the additions, the 2650, I don't know where you had it from and what that is.
Okay. Please, let's read footnote number IV. Read footnote number IV for me. Okay.
New equipment costing, oh, okay, 2650 was purchased during the year but has been mistakenly included in purchases. This is yet to be corrected.
So have we
Oh,
corrected it
okay, I
now?
remember you mentioned that, yes, I remember you mentioned that you deduct it from the purchases and then you add it to the cost of the person. Thank you.
You're most welcome. Most welcome. Please, are we together? So the total assets to be sent to the PP to the balance sheet is this. So for equipment, we have 260. For motor vehicle, we have 8388. And so the total equipment to be sent is there. So this is how the PPE schedule works. So for those who did not know anything about PPE schedule, today we've brought to light what we call the PPE schedule. Anyone with a question on that? So you know what is sent to the P&L, right? What is going to be sent to the P&L as depreciation? So when you go to P&L for depreciation, you can pick 5340 for equipment, and you pick 5592 for motor vehicle. If you also want to pick the total and refers to the PPE schedule as maybe workings number 5, so you can go and say workings 5, assuming, or workings 1 PPE schedule. Then it means that I have this and this put together, so I can directly go and say equipment depreciation workings 1. Motor vehicle depreciation is working 1. Then I pick it. Can we move on, please? So I'm done with the VII. And so let's do the other workings too as well. You know what? Let's go and do the sales and come back. So what would come to sales? And I'm also remember Yamra. Mubekwa kwa yaba na. Okay.
I will try.
JB,
Hey, why not pay the first answer? Obi say obey would be rehearsals, no person be rehearsals. Hey, student.
Time
At
not
least
there.
you have the explanation now. So I expect you to please anytime you write less here, I don't expect you to go and put it in brackets. Some of you make this mistake. You write less and then you still go and put in brackets say 2210. Please don't go and do this, okay? I beg you. If you put it in brackets, then don't write less. Write sales return. But then if you want to put there less, it means that you are telling us already that you are going to negate it. Okay. It means that you've told us that you are going to negate it. So there's no need for us to negate it again. There's no need for us to put there. So your final answer, which is the net, would have been the sales minus the sales return. And now this is your sales figure. Okay. Now, how about the opening inventories? So the opening inventory, you all saw where the opening inventory was in the question. You said it was the one with the date attached. Where is it? Inventory, 7,500. So I have 7,500. How about purchases? Purchases had a little adjustment on it. So the purchases figure, though was 96,100, had an inclusion of 2,650 in it. Okay. So let's see if we can find the difference. So you can write workings 1, note 1. Then you go and do the workings somewhere and come back. See note 1. Purchases. You see balance as per TB. Balance per try balance A. So you see balance per TB. We are accounting students, so if I write shorthand, so you should even understand. TB, try balance. It was 96,100, right? Then you see less wrong entry, which is the equipment. You can put into brackets equipment. Or equipment. What was the figure? 2650, 2650. So I have this minus this as my balance. So if I go to here, I've kept here already note 1. So note 1, everybody's expecting me to go and pick it from there and come and dump it, which is 93450. 93450. Okay. Did we have anything like carriage inwards in the question? Carriage inwards. There was nothing like carriage inwards. So it's a 0. So the total would still be the same. And then do we have anything like return outwards? Yes, we have return outward, which is a purchases return of 1450. I've already kept there less, so there's no way I'll put there less. So the net purchases would have been the purchases figure minus the return outwards, which is 9250. And I told you that I'll add these two together. I'll add this and then the purchases together to give me this figure. Then I'll now come and less my closing inventory. And the closing inventory was an additional information. Please don't type. Send me whatever you are saying. I've understood now. Don't worry. Let's closing inventory of stock. We had closing inventory of stock. 8010. So I added two together to give me my cost of sales. I less it. I less this and this. I get 91940. So you see C and A. So this should give me AB minus C. Okay. And that is going to give me 1360. I'm coming. I think the gentleman who said the drawings, I'm trying to side with you, but then I'm not trying to side with you. It says redrawn goods. Okay. So since it is redrawing goods, someone says I should put it there. But whichever way you put it, you are still going to get the same profit at the end of the day, meaning it wouldn't affect the drawing account. If it is cash, I'll put it under drawing. But once it is goods, he took goods, meaning that I need to come and add it to my. The reason why I wanted to take it to expenses is because it makes it easier for understanding. But then people are commenting that it is goods, so I should take it to goods. Because goods is what it's inventory. He took goods, he didn't take money. If he had taken money, I would have added it to the drawings. So I'll leave the drawing figures untouched, but then I'll come and touch the cost of sales, meaning that I need to make allowance for my cost of sales by adding what we call drawings. And now you said he took the goods, so I'll less it. Come and explain. The gentleman who raised the concern, come and explain. Oh, where is he? Is he sleeping? Yes, please speak.
There is not the one, but I'm saying maybe since he took the goods, you less the inventory, then you reduce his capital.
Yeah, so I'll less it from inventory and reduce his capital.
Yeah.
So after getting my cost of sales, oh, where did I put this dash? After getting my cost of sales, since it is an inventory, let me bring it here. So I'll less drawings. Less drawings of goods. Less drawings hyphen goods. Okay. So the figure was what? 720. Right. So that's from this, which will give me my cost of sales. This figure minus this figure. My profit would then be this minus this A. Are you even seeing what I'm doing? Can you even see?
Yeah.
Let me clean one of these boxes so that it shifts to the side. Okay. Hey, about 10. I mean,
Yeah.
you take back, right?
Hello.
Yes, Baba.
What about the new equipment amount which was included in
Yes, we
purchase?
prepared it here, and we came to pick the figure.
Oh, okay. Okay.
So you see, I said that this is note one. So when you come down to the notes, note one, the purchases figure, the one we used to know from the statement of financial position was 9610, but then what we have here is 93450. How come? Then you go and visit note one. And note one says that, oh, the purchases figure according to the trial balance minus the wrong entry that was then made will give you the difference. Can we go on? Can we go on? Okay, so this is our gross profit. Do we have any other incomes that we need to come and add? Yes, I think I saw rent received.
And we have discount receipt.
Discount received. I didn't write discount
Yeah.
received here.
Yeah, we have discount receipt at the other income, yeah.
So the rent would have been, you could have also go and do some notes on rent. So maybe say note two. So the note two, when you come to prepare the rent, so note two, and then you hyphen it and write rent received. So in the balance sheet, in the trial balance, in the trial balance, we have rent received as 740. So balance as per TB, we have what we call 7400. Then don't forget, we have an additional to be received. So accrued rent receivable from rent receivable account. Rent receivable account. It was what? The rent receivable, this one. The note II,
420.
420.
420.
So 420 plus whatever you have, this becomes the new balance that needs to be sent to the
Yeah.
balance. This one is
7820.
7820. So that is note 2.
Yeah.
So note 2, the figure you're picking is 7820. You know where we had note 2 from. Now discount received.
In the person.
That one is directly from the trial balance, right? Right?
Sure.
And discount allowed here. 1680. 1680. 1680. Okay, so when I sum them up, do we have any other income again? No, I think
No.
this two is okay if you have read through the question. Okay, so when I sum this plus the gross profit, I get 146. It's also profit, but it has a name which you can call it. You can call it Bernard, and it will respond. Okay, now your operating expenses are a lot. Operating expenses start from carriage outwards. Carriage outwards. And then I'm writing them so that you're going to do them. So this one, I'll just write them. Discount allowed. Please, the discount allowed figure has changed. How many of you remember? It is the one in the trial balance of 2,840 plus the one you have allowed the data. Do you remember you have allowed some data, some 10?
Yeah, that's 10.
All right. So your expenses for the discount allowed with 2,850. How many of you had forgotten? Myself had forgotten. I'm just reminding myself now.
Bernard, please write the carriage outwards and the figure.
I wanted you guys to go and do it too.
Okay,
780. But then anyways, let me finish that one. Let's look at the next one, which is what? The next
Heat
expense,
and light.
heat and lighting. Heat and light. Now, there is a little adjustment which you can either go and do as a note or you can do here. But then normally I prefer you go and do it as a note and then you bring it here, you transfer it here. So let's say heat and light, note 3. Okay. Now what is about heat and light, note 3? How many of you remember there was an accrue, note 3? There was an accrual, right?
Yes. Of 260.
So balance as per TB was
3810.
3810. And then
Yeah. Plus
the-
260.
there was an
That
accrual,
260.
260.
Yeah.
Footnote number 2, II. Heat and light accrue
Mhm.
was 260. So the balance now to be sent to the income statement will be
4070.
4070. 4070. 4070. Any other expense again? Yes, I think there should be salaries or something. There was a general expense. Let's pick general expense. It was direct. There was no adjustment on general expense. Expenses. Then we have motor expenses.
Common salaries.
We have salaries.
Mm.
We have bad debt. We have bad debt. We even have provisions.
So,
Provision of bad debt. Of doubtful debt, sorry. Oh, sorry. What else again do you think would come? We have drawings.
Ben are doing some come on.
But I do know drawings is an expense.
I'm aware by it won't come.
You will not
But
treat it.
operating
Why wouldn't you treat it?
About that.
Give me 110 reasons why you not treat drawings. You not treat drawings in the income statement.
Yeah, but today,
Oh, give me 110 reasons why you don't want to treat drawings in the income statement.
okay, Ben, I proceed.
Proceed to saying.
You proceed,
I want
please.
to understand your side and you say proceed. Explain.
Explain now. All right, so sorry I had to run and leave you here. I had to use the restroom, and I can't tell you guys over and over again that I want to use the restroom. Just pressed. Anyways, we all went to write paper. We are all tired. How many of you know I wrote paper today? Apart from
I
Joshua.
didn't know.
Apart from Joshua.
Mm.
So simultaneously we write our exams together. So I wrote a paper yesterday, I wrote a paper today. Tini na yabre.
I'll look for you next week. Mm.
Oh, you not see me on campus, or me, I'm on the Adenta campus.
Oh,
You're on the Adenta campus. I did bring that you are in level 400. That one day you can find me. So for the level 400, we always meet on campus. Even today we met, we discussed a few things that we were going to write before I came home. I wrote in the morning, they wrote in the afternoon. Okay.
Please, where do you stay?
As far as Sama.
Hey.
That is why I stay.
All
Right. So, just like Joshua is saying, according to the new IAS, drawings wouldn't come here, but then I would have treated drawings there for you it would have still reduced your profits, your surplus, and at the same time, its corresponding entry would have been sent to your equity, which would still have reduced the profit. And at the end of the day, you still have the thing. But some may chairman account minka. So the loan interest can be treated here as an operating expense, or you can wait. When you determine your profits, then you come and less the loan interest from it. Don't forget, I said the interest according to the IAS is called finance cost. And finance cost can be treated. So I'm writing the items that you guys will go and fill in here. Now, on salaries, I'll send a sheet so that you go and complete the sheet. On salaries, there is a note. On salaries, there is a note because the footnote number II states that there's salaries that is being prepaid, meaning that whatever you have as a salary figure, you must less the figure from it. Do you agree? So let's go to footnote.
Sure.
Let's go to number 4. Note 4. You have prepaid it, so it means that the figure that you have in there is more for that period. So salaries was 3010. So try balance as per TB. As per TB. All right, so balance as per TB was 30100. And there was a prepayment, which is about 720. Footnote number 2, 720. So let me write additional information 2. II. So when you pick it, you know what you're doing. This is also on II. This was also on II. And this purchases information was on Ivan. And then the discount allowed figure, you find it at you find it at V. Okay, so general expense is directly picked, motor vehicle is directly picked, bad debt is directly picked. It is provisions that we said we find a difference, and that is also under which note? Note what? I think note VI. Note VI. So you have 736 as your new provision, and you actually had 700 as your provision. So the excess of 36 would also come in. Your loan interest you pick directly. Now, depreciation. Don't forget the Almighty Father. Depreciation, though it's a non-cash item, but then it is treated as such. So equipment. I told you can pick the whole figure, but if you want marks, you can split it and still you'll be marked as one. Motor vehicle. All right, so you know where to pick them from the PPE schedule. The PPE schedule we prepared in sheet 4. So that can be open now, tell them say, open now, tell them say. I said it is the depreciation for the year. Please, it is not the total depreciation. No. It is the depreciation for the year. The depreciation for the year. The depreciation for the year. So for equipment was 5340. For equipment was 5340. For motor vehicle, 5592. Thank you. 5592. So any other expenditure item that I haven't recorded in here for you to go and do the total and then come back at me. If there are no expenditure items again, then you have to add all the expenses, which I think I can even do for you now. You have to add all the expenses here. So hit general expense. Let's go. Let me complete this one. General expense, general expense, general expense.
55,800.
55,800.
100.
And then motor expense is 6,200. Then salaries, just like I said,
29380.
29380. Oh, I didn't do it here. So this one was less 720. I didn't write less there. Okay, 2930. Bad debt was 680. 620 or 680.
680.
And this is 36. What else do I have? Loan interest of 1,200. And then depreciation already been completed for. So this becomes my total expenses. And then when I find my total expenses from this, I have my net profit after interest. So, hey, did I miss something?
Yeah, the right path.
Hey, my boss is collecting me. So just like I was saying, you see this loan interest of 1,200 could have been taken out from here and then been brought here as 1,200. And then it will be the net profit before interest and tax. It's still the same thing. So this would have been net profits before interest and tax. And then this would have been less finance cost or loan, less loan interest. This is proper way of doing accounting. Then you come to net profit before tax. We're not giving tax figure, right? We're not giving anything on tax. So this would be the net profit for the year. Net profit for the year. Net profit for the year. Okay. The statement of financial performance. Okay. And so the balance sheet, the two assets that we had was what? Equipment. And then we had motor vehicle. So please, this one already in the PPE schedule, you have solved it. So quickly, you come and pick their written down values. This and this is what you're going to send there. So I have 12,260 and that. So you can try your hands on it. So we my cash shell will be a free. So you go and pick them from the PPE schedule. This two from the PPE schedule. These are the only non-current assets that we have. So we come down to our current assets. So meaning that we can claim the allowances that we've made. So no. Let me still leave it this way. Okay. So current assets. Closing inventory was 8180. Do we have any cash and cash equivalent in the question? Do we? It was bank. So we don't have any cash and cash equivalent to 0. We had bank. And the bank here was 7420. But then don't forget that we have received some 440 in our bank account. We have received some check of 440. So our bank figure would change a little bit. So 7420 plus the check figure that you received in your account of 440. Do we have any adjustment on bank? Any other adjustment? Can we find any adjustment on bank here? Any adjustment with respect to cash?
That's all.
That's all.
That's all.
Adult music. 7420 plus 440. Okay. That is 7860. All right. So 7860. We have prepayment, right? How many of you remember that there's a prepayment in the figure? That is 720.
Salaries.
That is prepayment of salary. So you can write prepayment hyphenated salaries. Okay.
Rent accrued.
We have rent accrued.
Oh, 420.
Okay. I wanted to write it somewhere here. Accrual. Rent. Okay. Why is accrual rent coming here? Because this is an income. It's a receivable. So I change it to say rent receivable. But someone calls it rent accrual. Yeah, because after says canveba. So accrued rent. And accrued rent is the same as what our brother is saying. So that figure is
420.
420. Okay. Now the receivable, we adjusted our receivable a little bit. And then we said that the provision for bad debt would also affect it. So our receivable was 36800 less the adjustment of the allowance. So you go and
736.
you said what?
No, 36064.
Okay.
That's all.
We don't have anything like cash and cash equivalent, so you can decide to clean it from here. But please, this is our asset. This one, I have done that in the PPE schedule. Please, if you don't understand the PPE schedule, sit down again and look at it. It was one of the things.
Mr. Bernard,
Yes, boss.
please, the PPE schedule.
Yes, sir.
Please, how did you get the depreciation for the year for motor vehicle, the 5590?
It was a reducing balance method. That was what the question said. So on a reducing balance method, what you need to know is that you need to less the accumulated depreciation from it first. Do you get it?
From the total.
Yes, boss. So before you can get, it says reducing balance method. Okay. So we could have actually put here difference. But then it wouldn't make sense for us. But then what you know is that it says reducing balance method. Okay. It says reducing balance method. So reducing balance method, we said that it is the cost minus the accumulated depreciation multiplied by the rate. But if it is a straight line method, it is the cost by the percentage. Do you get it? If it was useful life, we would have just divided the cost by the useful life. So that is it, basically. It's because the question just specifically said reducing balance method. Reducing balance means that reduce the cost that you have by the accumulated depreciation for the period and then find a percentage on it.
All right.
Okay, so we are making headways. All right. So that is it. That is it. So this is the figure that I'm saying you pick. So for equipment, I pick what we call 12 to am I correct? 60. And then deal. Oh yes, it's not difficult. Yeah. I know what I'm saying. It's 3, 4. It's 3, 8, 6. Okay, go from point as about. It's one of the easiest questions I've ever seen. This question, very, very cheap. Okay, so now that I have done this for you, you go and do liabilities. You know, assets plus total assets is equal to liabilities plus equity. So we can actually have it in two manifolds. Someone can do current assets less current liabilities to get working capital, and then come and add it to the total non-current assets to give you your assets. Then you come and write the equity to it. So it works like this. Asset is equal to equity plus liabilities, or assets minus liabilities should be equal to the equity. So whichever one that you feel you're conversant with, you can work with. Any of this is correct. Okay. So let me do equity and liabilities. Sorry. So the first equity would have been the capital, less drawings,
Add profit.
less drawings, add profits, add net profit for the year. And then you come and then do your liabilities.
We have no current liability.
So the liabilities can be grouped into current and non-current. So please, I'll send this solution. Go and complete it. Joshua will complete it with you. Joshua will complete it for you, or you complete it yourself and then come and share it with me to confirm with my final answer. Just the financial statement. It's not even difficult. The capital there, you bring the same capital. The drawings, don't forget that the drawings you have here, there's one in the balance sheet and there's one in the footnote that we said would affect it. So there's a 720 here plus a drawings of about
2250.
So that will be 22. I did make us a monk kana me here. So capital was in the
Mr.
footnote.
Bernard,
Yes, sir.
with the loan interest,
Mm-hmm.
why did we record why is it 1,002?
Why you wanted me to add 10% of the
The
loan, or
interest,
you wanted me to add 10% of the loan figure 1,300 and record it. Once they've given you loan interest, there's loan interest already.
The 10% loan will be enough liability.
No, wait. What he's trying to say here is that the 10% on the loan, I should have done 10% on loan, 1,300, and then add it to the 1,200 to give us about 2,500, right? That is the question you're asking me. Is that not the question you're asking me? You know, whenever there is an interest
because
rate, whenever there is an interest rating before a question like this, it is assumed that there is an interest to be earned on this figure. So this loan interest is not the same as the loan here. So what he's basically saying is that the 10% here loan means that the loan that you went in for, you need to pay an interest of 10%. Meboa.
so it is the interest that we record, or
No. I'm asking you, is that not what you are trying to say?
Yes.
Yes. So one, you have a point. If I add it, it will still give me the same balance, but then the balance will go a little bit high. And I think 10% loan, someone would think it is just the account name of the loan. But then ideally, ordinarily, we need to charge the interest. And he's right. So the loan interest here, where is it? I brought it here, finance charge. You see, there is one, a loan interest. Two, there is a 10% of the 10% loan, which is
On
10%
the
of
13,000.
the 13,000.
Yes.
So 10% of the 13,000. So my total figure here would have been the profit minus the loan minus the next loan. This loan interest here is not the same as the loan figure. Your account will still balance at the end of the day. No, Joe, you touch it. You touch it. It's just like you have preference share, and then they tell you 10% preference share. Once they tell you 10% preference share, it means that the dividend to be paid on the preference share is 10%. Don't forget, I taught you financial management, and I mentioned it in the financial management. It is the same thing here. Okay. So this is an interest to be paid. It's going to reduce your profits. So don't worry. It's your account will still balance. I know the fear. So I told you, remember, I told you that you finish the work and the account will balance, and then you are over jubilating. And then you think, yes, you've done the entries. Your profit would be reduced here, and then it will add it. It will balance. Joshua, watch this.
Then I'd proceed.
Aye. Aye. Okay. So let's go on. Let's proceed. Proceed, yeah. Drawings in the saying 22500 plus 700, 720. Okay.
That would be 23,220.
23,220. Yeah, Mr. Mapon. Profit for the year. Let's link the account. I come and pick this figure. Okay, so it is these two figures that I'm adding, and I'll bring it here. So this figure plus this figure. Now let's go to the loans, liabilities. So the interest is a payable item. Okay, Joe. You've not paid for it. That is why it didn't come here. So your payable figure, what do we have any payables here? We have a payable here, 420, right? 420 plus the 1,300, the loan. You've not paid it. You are yet to pay it. So you've not paid for it. And then any other item again can you find here with respect to payable? Do you have any payable? Yes, we have a payable of 8940 in the balance sheet. 8940 here. Plus the 420 that we were able to come out with from this question. It wasn't 420, 260 heat. Please, it's 260, not 420, 260. 260. Okay. Now from the 260, that's it. So you now add the payables. What again do you think we have for liabilities? Liabilities. We wrote them here. This is a long-term liability. Current liability. Do we have any current liability? No. So it's just one current liability that we have. So we could have just written here liability. We don't need to We don't need to split it into two because there's just one liability. So we have the loan fee, the loan to of 13,000. So what is the payable?
Hmm.
So the payable is made up of the loan interest,
Colombo. Colombo. Ufele balance. Ah,
a balance.
e balance. Ene mi boss jibo shene ke balance. Ah.
Wa mono enye kenye.
Afimo, afimo.
Gava wa mono enye. So total, do you have any other liabilities? Have I omitted any liability?
Everything is okay.
Have not omitted any liability. Are you sure? Okay. So what do I have?
Afarija. Afarija.
Who is that, Parajan? The number keep reducing. People are sleeping, forgetting we are in the exams mood. Obama no.
Oh, boss no balance. Serious.
Obama no low. Oka was in share. Oh, there's something.
Oh,
I watch for
minus
Papa.
plus.
You see,
I understand. I understand.
minus plus. You
I
understand?
understand.
This
I understand
10%,
now.
this 10% loan that was mentioned was not paid. If it was paid, they would have written it here as paid. Since it was not paid, it's a payable. It is yet to be paid. So you treat it as a payable. The 10% of the 13,000, it's treated as a payable. So when you were saying it would not balance, I was just laughing because you thought I would have just passed one entry for it, which is just the income statement. But then that
Sure.
10% is yet to be paid. So it's a payable item, which must be added onto the payables, and then you determine it. So at the end of the day, my account is balancing. Don't mind this one. So equity and liability is matching up with the total asset. And then we call it au revoir on this question. So, guys, just like I wanted to give you the assignment, I'm done. So you can look at it, but then don't build too much hopes on it because you have a lot of things to learn. There was another question. I'll also share the solution. There was another question, which I think we have already done justice to. Someone sent it to me today. And I think if you pay attention to it, you realize that we have done justice to it. I think that was what the full-timers had in their exams. It was in your slide. The question on the estimate, and then the
That
question
was our mid-semester too.
that was your mid-semester. I think someone
Yeah,
sent it to me.
the other one.
Solve it
It's
that. I think I solved it with you in class. So I
London.
beg you, in the name of anything so dear to your heart, this is the solution. I did it in class with you. This was for the estimate. They are just asking you the impact. The impact I told you decrease our profits because we have what we call depreciation, and depreciation is said to decrease our profit. And so we treated that one, and then we did that of the other one, the cost of goods sold, and then we happened to have arrived at these two figures if you were only in class and then you were there. So visit the video on the IAS 8. I don't want to do duplicate of an effort. And so let's not do a duplicate of effort. And then let's try our best to I wanted to show you where to find them in the video. So maybe. Please, I wanted us to do cash flow statement, but I realized that it's 10:41. Most of you go to work. So I don't know. My week is very, very busy, very, very tight. I am really handicapped now. So I wanted us to finish most of the things today. So to help me and help you better, I would want you to go and look at the IAS 8 and then IAS 10 from the video recordings that we have. Master it. And then also prep yourself towards the shares. Thanks if I solved the question with you on shares. He did shares on MidSem for the batch 2023. We did cash flow statement. I taught you the cash flow statement, but then I still want to solve the question that was given to you an assignment. So you need to go through all of these things. Let's meet. So the IAS 8 and then the IAS 10 can be found here. Please look at it from here. The solution is within this two. And you find it. I'll share the slide. I'll share the document with you tonight, but then I need you to go through again. If you want to learn shares better, if you want to learn the others better, you can still visit the others one. You can still visit this too. So this is normally the question that we have for main exams on cash flow. So you can also look at that one. We have discussed the solution. In fact, learn everything here. I'll meet you on Wednesday at dawn so that we discuss the cash flow, and better still we'll do something on the shares again. So if I don't meet you again now, it will be on Wednesday at dawn. If I forget, Tuesday, if I don't communicate anything on Tuesday, one of you should do me the honor by reminding me. Okay.